Hello traders, welcome to Investoo.com's The Essential Guide to Supply and Demand Trading. In this lesson, we're going to talk about liquidity, okay? And when you look at this US dollar, Canadian dollar, you are going to understand what liquidity is. Well, liquidity is the ability to buy or sell something without causing a large price change. This means that when we look at the financial markets, liquidity is when at a single level, we have a lot of buyers and sellers with pending orders, okay? This means that if I come at this specific level and try to buy the market, my buy order is not going to have a huge effect on price itself. This means that my buy order is not going to make price move 20 pips up, okay? That is a liquid market, and Forex is the most liquid market there is. But there is sometimes when liquidity is a problem, and you can see this right here. Okay, this huge candle, let me just zoom in this for you. Okay, this huge candle is during the non-farm payrolls last week. And even though it's a news event, this doesn't happen much in the Forex market, okay? But it's important for you to understand this. At this level right here, there was a huge sell orders from a lot of traders and a lot of banks and a lot of big money started to sell the US dollar, Canadian dollar. And this means that there was no buyers at these levels trying to hold price up. And if there were buyers at these levels trying to hold price up, well, they were eaten by the sell orders and the sell pressure of these orders at the top. So basically this is what liquidity looks like, and it's important for us when we're starting supply and demand in the markets, because we are going to look at the markets at churn prices. This means, for example, if you can closely see this drop in the US dollar, Canadian dollar for about 140 pips, buyers came in at the zone of support, okay, which is also demand. Now price came to the zone of demand, and then liquidity was found here. Buyers were found here, and buyers kept price from crashing even further. And basically this is what liquidity looks like, or illiquidity looks like, in the Forex market. And you can also look at some other markets such as gold during non-farm payrolls. But gold is it's very illiquid when it starts to move. Just look at these moves to the upside, and what happens here is that there were a lot of pending orders to sell gold right around these levels, okay? And those pending orders add liquidity to the market, and when price starts to eat through those orders by players buying at markets, this means that those market orders remove that liquidity from the market, because those market orders to buy gold at these levels are actually eating through those pending orders to sell. And what happens is that liquidity is removed and big spikes come into play. So I needed you to understand what liquidity looks like and what liquidity is in the Forex market, because we are going to use it to locate supply and demand zones, which we are going to learn to trade from.